Are you thinking about buying or selling a home in 2025 in the Bay Area? Are you curious? Have things slowed down? How have Trump impacted the things that are happening in the Bay Area real estate market? How has DeepSeek impacted people's opinions? How is NVIDIA and all these magnificent seven companies doing? And how do the employees feel? And what will this year look like? Now, I have no idea what will happen after 6 months. But for the next 6 months leading into the summer, we should have a pretty good sense as to where things will be because January is already showing a lot of movement, much more than I've ever experienced in the past. My name is Spencer Sue, and in 2024 itself, we've helped over 60 families with their moves, which is the top 1% of this country. So we do more than most realtors do in their entire life. And so we see this week in and week out. And because as you've been watching through the channel, we look at things very analytically, but we also have the deep insights as to making offers multiple times a week and also seeing the results. You watching this will have a competitive advantage if you work with us. So if this is something of interest to you, or you want to go over a game plan to upsize, downsize, reassess your options, understand the value, we got to talk, and I'm happy to give you this transparent feedback. Now, as we look at the data, I'm going to be showing to you the median sales price of all of the major counties here in the Bay Area. You got Alameda County, Contra Costa County, Marin County, San Francisco, San Mateo, Santa Clara County. So you got all of the primary counties here just as a median so that we can see the overall numbers altogether. We'll highlight a little bit of later on the areas that are already doing much better than others because generally there is a trend. The big trend is still the return to office mandate. And so if it's a return to the office, you got to understand where are the jobs? The jobs are in between San Francisco to Silicon Valley. And so traffic will all flow that way. So you may have seen if you live in Contra Costa County or like the Tri-Valley of the East Bay, you may experience a lot more traffic than you may have experienced in the past because those areas have been very popular over the years, but also those are the areas where they have more room to build. So you have places that are being built in like Antioch, Brentwood area. You also have places like in a Tracy, Mountain House, Lathrop, all those regions have a lot of land, and so they have a lot of new construction. And so that traffic should theoretically be worse than before, right? Because you have more density in those places that are further out. Yet it's not like other places shrink. It's just people had some options before, but now more and more of the population continues to be expanded out there. But we do see a big migration back. Now, that being said, what I want you to see is this. January is over as of right now. This is recorded as 10:15 p.m. on the 31st of January. So this is pretty much all the data that you're going to get for the entire month. Take a look at the median sales price. You may think, oh wow, prices have been dropping. And that is partially true. A lot of it is more related to seasonality and also the amount of inventory that is there. But you see, if you follow the previous years, this is an example of last year. January tends to be the lowest. Keep in mind, this is a big lagger though. So January transactions here are transactions from December. Because think about it. If you got in contract at the end of December and you're usually at a 30-day close, that result won't be posted till January. So January numbers are usually December figures, which are some of the lowest that you'll have. However, you can see what do the February numbers look like, which are means these are the ones in contract in January, which has all ended. You can see usually there's a pretty big increase, and then it jumps very significantly over the next few months. My guess is that next month you're going to see a bigger gap than this because I'm going to show you one thing. I'm going to do a real-time exercise of homes that we made offers on this week. I want you to review the numbers with me. This is what I do with all of my clients. Very data-driven approach. You look at the numbers together. I'm not going to tell you what is sold for yet, but at the end, I want you to take a guess where you think these results are to be, and I will give you the answer. And that's your cheat code for the next month because that won't be public, as we just learned now, for another 21 days to a month. But you can see generally home prices declined to January, and this was no different. You can see the January number of 2025 was at 1.128 million. The previous January was at 1.11 million, so only an $18,000 increase. Nothing special there. Very modest when it comes to the Bay Area market. Now, the number of active homes, this is very interesting. because I want you to see and compare these different numbers from right now versus what we may have received last year. In general, the activity and the number of listings and the number of homes has actually significantly increased. That has been a lot more beneficial. I see the same thing within my own clients. We got like 8 listings already signed, and we are only in January. So the good news is overall, because we've experienced some of the lowest amount of transactions in the last few decades, by the way, it's like it was really low numbers. We have an artificially low baseline, but the numbers are returning a little bit more back to normal. Take a look at this. 5,640 homes available right now versus you look at the same time last year, 4,327. That's an increase of 1,300, right? And so that's what is that? About 15-20%. I mean, this is the activity that I would be anticipating through this year too. I expect that we should have more than last year, 10-15%. Now, to give you perspective, this may be a little bit slower, but let's take a look. Let's play around with some numbers. Let's say you go back all the way to, what was a busy time? Before COVID then. Let's say maybe 2019. I think 2019 might be a busy time. So you can see when you compare to, let's say, even in 2021, 2020, 2021, you can see the numbers are getting a lot more similar to some of those figures, right? So during this time was a very busy, actually kind of an average time. But you can see the last couple of years have been so bad and so low. So it's a little bit more returning to the normal. So on one end, that is good because why is this happening? One, many sellers are more willing to sell. And they're doing that for many reasons. One, they may be like, look, prices are fine. The rate is what it is. Like the rates have not improved drastically through the years. And so people they feel like, look, the rate is what it is. Let's go ahead and just move on with our lives, upsize, downsize, like move out of the area. That's happening a lot less, but it does happen. And so those are motivations for people. But more importantly, it's because they have the confidence to move and do something else. But what this also is good for is we've always had an inventory challenge where people just feel like they can't buy something that they want. And so when you have more properties to be sold, there are more buyers also out there, out and about, looking at places and deciding a move for themselves, right? So overall, it's just a general better thing altogether, right? There's just more activity and more just people willing to make moves. And so the question that you may have afterwards, and I'll show you an example, is what is this likely to bounce up to? If you look at the last January to February numbers, it went from 1.1 to 1.21. So 1.11 to 1.21. That's like 9% increase in 1 month. My guess is this is going to be higher. This is probably going to be, it's going to be very staggering. Let's just say that. And I'm not just talking about a fake low list price. I'm talking about where it should have sold and where it did sell. And we're going to go through a live example momentarily. But let's look at any other stats that you may be interested in. Maybe the days to sell, the median days to sell. You can see, interesting enough, it had a pretty big spike up. But remember, these are all numbers from December. And you can see these are very similar to numbers to how it was in last January. So nothing drastic there. So it gives you a breakdown as a macro of the different counties all as an aggregate sum. Now I want you to see a breakdown of every individual county. So as a recap, take a little view of this, right? Generally, you can see versus last year, very modest. That's only like what, 1% if you compare January to January. Now the question is that evenly distributed? The Bay Area is a very big area, right? So let's see, is that all experiencing the same thing? Look at Santa Clara County for now. This January 2024, 1.44. Right now, 1.49. So that was at 50K. So that's like 3%. So it's a lot better and higher than the others. Let's take a look at San Mateo County. Keep in mind, this is also an aggregate of single-family condos and townhomes. Different asset classes are performing differently. Single-family is going to be very competitive. You look at San Mateo County. Look, 1.5, and right now it's at 1.594. So that's what, 90,000. So that's about 6%. That was a winner, right? Clearly a big winner relative to the rest of the counties. So you may already start seeing some other counties are not doing as well. Look at San Francisco, 1.33, but right now it's dropped pretty significantly, 1.2. Let's play with this number a little bit. Let's look at single family. Let's see if it's the same result. Single family though, January 1.575, and even single family wise has not performed that well. So San Francisco has its own challenges, but one may argue, is that a good opportunity to get in now? Your personal choice to make. Well, let's take a look at another county. Let's look at Alameda County. You look at Alameda County. Look at that January 950. Right now, 922 500. It hasn't performed that well. Still depends on the area. I would segment it. Alameda is a very big area, so certain areas like Oakland have not performed well at all. Places like the Tri-Valley, unfortunately, not well at all. Many of those areas have declines. But some areas that are more prime, like a Fremont. Let's go take a look at Fremont real quick. Generally, places like Fremont have fared better, right? So if you look at Fremont relative to the county, 136, it's a slight decline here, but it has a big variance. So something to be mindful of. If you look at single family in Fremont, you can see a very different story. So this just shows you, look, $1.56 million in January 2024. But look at what is in 2025. That's a big jump that you just saw. 1745, right? I mean, that's a very significant increase in change. So it really still depends on the asset price, on the asset type, but it also depends on the area. Let's point out Contra Costa County. Now my team helps clients all over the Bay, so we know all these different markets. We see what's going on. We know what's happening in these sub-markets, and so depending on your budget, depending on your commute situation, we can help guide you in terms of your options. 735 for January, 745. So very slight increase, 10 grand. So a little over 1%, but that's kind of the median. So you're seeing some do well. And then let's look at the last one, Marin County. How's Marin County doing given San Francisco it wasn't doing that well? So for Marin County, you can see Marin County went from 1.331 down to 1.236. This is actually some of the worst performing areas that you will see and find for many reasons. So you saw very big gravitational pull. San Mateo County has done well. Santa Clara County has done well, right? Some of the areas are a little bit further out have not. So that's the thesis, and that is the direction where things are still rolling. And there's no reason for it to swap back yet at any point. It's nothing in the near future, but you can see how things have been. Now, let's do some real-time exercises. We're going to look at two examples right now. We're going to look at this property at 3375 Kenyon. We're going to look at this property at 2939 Miles. These two literally just transacted this week. They both had a deadline, one I think on Wednesday, the other on Thursday. So let's review this together. This was a 3-bed, 2-bath, 1513 square foot. Take a look at this stat they have. All of these have transacted or are on the market over the last 3 months. So as recent as it gets, within a mile of this home, single family, we filter out a lot of things already. So let's take a look at this together. Let's look at this condition of Kenyon. So if you look at this condition, overall, it got virtually staged. This is not like updated. They just painted the cabinets. The flooring is good. Bathroom is okay, not updated, right? It's not an updated place by any means. Okay, so I want you to see that. This was one that went on the market first and went in contract on Wednesday first because they had a deadline earlier. And then you had this one, 2939. Oh, sorry, I think it was Tuesday, Wednesday. Not Wednesday, Thursday. 2939. Take a look at this. This one, condition-wise, also fairly original. This is not updated places, by the way. Like the bathroom, this is like a condition from like 20, 30 years ago. Overall, it's a nice home, but not like updated. And this was a little bit smaller, 3-bed, 2-bath, 1456, 6,300 square foot lot. Okay, so these are the two subject properties that I want you to just remember. Feel free to take a pause and review. Now, if you look at what has sold, let's compare things that are of a similar size and location. All of these are clearly in similar location. They're all within the same area. I mean, literally within 0.6 miles. And let's just point out the ones that have sold because then these are public information. You can look at a few of these. 1127. So let's look at this. Dibble Court, 4-bed, 2-bath, 1640 square foot. A little bit bigger lot. Sold for 186. Let's take a look at this. A little bit different, right? The garage is in the back. The condition of the interior, this is very original. but it's still a good data point. Let's look at this one. This is one of the one-car garage. Interior is actually pretty good. This is like an updated kitchen. You can see updated cabinets. This countertop doesn't necessarily look like it. That countertop looks kind of original. And looks okay. So you can argue that this is slightly better than the two subject property that we saw, but not by much. But that's a 4-bed, 2-bath, 1127. So for 185. And then let's look at this lot, 574 Flannery. This sold for 2.2. I don't think this really hit the market though, but it's also another data point. 3-bed, 2-bath, 1687. It's a bigger lot. Look at the areas, right? They're nothing like majorly negative about them. They all go through the same school districts. There's nothing like that to factor in. They're not next to a busy road. They're not next to a train. There's nothing like that. It's literally all within half a mile from one another. All right, now let's play the guessing game. I know the answers, but I want you, when you see this number, you tell me and feel free to write it out and be upfront. Where do you think, let's go with mile 1456. If you were making an offer and you were like, look, I looked at the old data, Spencer. It seems like the market was going down. But you also learned a little bit that generally the month after in February, which is January numbers, they do go up a lot, like 10%. Where do you think these went for? Where do you think miles went for? 3-bed, 2-bath, 1456 square feet. Where do you think this went for? Do you think it's already priced fair? I mean, look at the sizes of this. If you look at Dibble, you would say, yeah, it's definitely overpriced. If you look at Flannery, you'd be like, okay. Or if you look at Flannery and Dibble, you can be like, okay, maybe this goes to 2.1, right? Would you pay 2.2 for it? Would you pay 2.3 for it? Maybe, as you can see, if you went to the 2.3 already, you'd be like, wow, that's kind of high, right? There's nothing that would support that. I don't know the exact number for this one, but it went for more than 2.5 million. What do you guys say about that? What's your comment about that? Right, so for more than 2.5 million. So that's an example. Now, how did people get to that? I mean, look at this example. There's a 3-bed, 2-bath, 1260 sold for 2.4 already. This also never hit the market, and this looks pretty not that hot, right? Doesn't look that good in there. Now let me just double check this real quick because this is like let's just see this one. I just want to make sure the schools are all the same. No, the difference. This one actually goes to Cupertino, so this doesn't count actually. So this wouldn't be applicable. But if you look at those other ones, they're all the same schools and same area. So that one's different. But as it just brought up, even though there's a comp there, that's not irrelevant. It shouldn't be. It's definitely not a relevant comp because it's a completely different school. But it has already happened. This went for over 2.5. I think they had like 19 offers. Right? So it is what it is. It probably went for higher than that, by the way. My guess is maybe even plus or minus high 2.5s or maybe even 2.6s. Because let's roll to this one. Now, this one actually went in contract first, though. So the people that made an offer for this had the opportunity to make an offer for this one afterwards, right? So 3-bed, 2-bath, 1513. This one actually went first. So this one had a deadline. This had a deadline on Tuesday. So this actually went first. So people got to see the results and then make a bid accordingly because they can make a bid on the smaller one. How much did you think this went for? Now, keep in mind, this went first. 3-bed, 2-bath, 1513. You saw the condition. I gave you enough time now. This sold for more than $2.6 million. So this is why I'm saying before, and this is why I'm saying most likely, the numbers in February will be really, really big. Now, the media may report these old numbers of these January numbers, which will be like, oh, prices have declined, the market sucks, blah, 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 blah. But once you make an offer, you will see for yourself where it ultimately was, especially if you're working with a data-driven realtor like myself, that we will go over this exercise. But we got to put in a buffer accordingly, and or you may need to adjust the expectations of where you look, right? So if Santa Clara is out of the range, which it could be for many people, look in places like San Jose, which are plenty fine. San Jose is a lovely area, big area, lots of good places there. But this gives you some intel as to what is happening. And it's not just Santa Clara. It happened with a bid that we made in Cupertino, that went also not as extreme, but that was also a much higher price point. That was a $4 million listed and probably was worth around 4.2, and that went for 4.4 plus, right? So that's an example, but that was a different price point, right? We have a serious experience in Redwood City. Redwood City, that one went for probably at least 10% more than previous historic numbers, right? So it is happening across the board. So this gap, if you do that math, if you think a fair price of this, you tell me what a fair price, if you look at the history, would have been. I would have said a fair price may have been plus or minus, I don't know, 2.2 or something. I think that's already, as you can see the numbers, pretty high already. So if you think about a 265 for that, 450 over, that's 20% more. Not 20% more than list price, so we're not even going through that kind of shenanigans. There's nothing, we're not going through that. We're going through what it could have sold for before based on what has sold. And that's what it is. So I don't want to scare people, but I also want people to be understanding and realistic. And once you make one offer, you will see this very quickly. And the question is, do you want to get ahead of it? What do you want to do? So if you're trying to buy, you got to be committed. You got to stay in it. Don't let this discourage you, but you may have to reshift other areas that work. And generally the way that works is you just shift the next neighborhood over. They're generally a 15%, 10 to 15% difference each neighborhood you go over. So think about San Jose in the south. You got Cambrian, and then you got like Blossom Valley, right? That shift is like 15, 20%. And you will find a place for your previous budget. But you got to make those adjustments. But if you're trying to think about selling a place, maybe you didn't sell a place before, and you're thinking about, I'm going to leave the area, I'm going to cash out. This is a crazy good time, clearly, for anyone that owns a home that wants to maybe divest. Maybe you want to divest out of the area. Maybe you want to get into a higher cash flow area like a multifamily or something, right? There is a lot of exit good opportunities, but from a buyer perspective, you got to be patient and understanding of the data. And once you make one bid, you will see, because I will help you understand what it ultimately sold for. And also at the same time, you're trying to sell, it's hard to argue like why is not a great time to sell, despite, as we saw before, rates are very sticky. Rates are not going anywhere. The Fed did not cut rates, and even if they plan to, it makes no difference right now to the treasury yields and to the mortgage rates, because there are other concerns that the general macro has of the government debt being able to be repaid. That's why the rates are what they are. That doesn't impact these necessarily, because the stock market has done super well and has done well for a long time. And as long as the stock market can even stay the same, people's liquidity continues to improve, right? Because people are investing and they're cashing out, or they have more confidence, or more time has gone by and they want to make their moves. So this is a lot longer, because it's such an interesting thing, right? If you're like, oh, I'm just looking at the data, it shows you one thing, but you missed a giant picture and giant thing, which is January is the lowest point of the year, because those are December transactions, and it goes up very quickly. And this month, by the end of February, when I do this, then you should probably see that, unless something changes drastically, which doesn't seem to be happening anytime soon, especially when you have these properties that are doing 20 plus offers. If you want to go over a game plan, I want to be your trusted real estate resource. I'm like this last month alone, we got a bunch of people in contract and buying. We signed like 8 plus listing agreements, and we've also done over 30 strategy calls. So it's been our busiest year ever. And so we would love the opportunity to help you anywhere in the Bay Area with your move. So if you like the process, you like how we think, call or text us 408-547-4590. See you next time. Bye now.